Okay, folks, welcome back. Money and politics. Here we go. We're going to be starting, and as always, go ahead and read this if you want, just to know that you shouldn't trust everything I say. I'm not a financial advisor. I'm not a financial broker, and I don't know all of your circumstances. So you have to make your own decisions. I can hopefully give you some ideas that you can act on. And that's what I'm going to try to do today. Well, it wasn't a fun day for those of us who have been invested in Humbl. Let's take a quick look at the action here. We had the stock moving down all day. As you can see, it didn't just collapse. You know, we kind of just bounced around. And what's interesting is somewhat here is we got down to about 426 right before the market closed, and then we came back to where we ended at 450. I would say that Humbl has a lot further to go on the path from where it is today. And I would say that, you know, at 450, we could perhaps see that we are quadrupled by the end of the year. Would I think it's impossible for us to go to 20 by the end of the year? No. I wouldn't say we're going to 100 by the end of the year, as some do. But no, we could be at 20. I mean, that would only be, if you go back to last week before the reverse split, the equivalent of 5. So we could go to 20. But we could obviously much more easily go to 10. And again, as I said the other day, I mean, you look, that would be up 100% from here. You don't get many years where you go up 100%, folks, so that would be something. One other thing I wanted to point out about Humbl, and sorry I bounced around a little bit here, but let me bring up that this is the volume today, okay? I feel like the weatherman trying to point this right, okay. So if you go over and you see today's volume was 19 million shares traded, where right below it, the average daily volume was 31 million shares traded. So even though Humbl went down today, it was not a rout. You might think it was a rout, you know, everyone running for the exit door because the price went down. But when you look at the volume, a lot of holders, a lot of shareholders are just holding on. And so you had those that were active in the market today. There were more sellers than buyers, which is why it went down. But it went down on light volume. Let's take a quick look. This is what I brought up yesterday. We had such a movement that last Thursday, just before the split, your money would have closed. If you had 10,000 shares, your investment would have been worth $8,500. Yesterday's close, it would have been worth $14,950, basically $15,000. So you were up like 70-something%. I'm just doing this off the top of my head. In 2 trading days. Well, you can't expect that to be the norm, folks. And when we're looking at this kind of movement, you're going to have to expect a little bit of retracement. I just did the numbers. We closed at $4.50. So if you multiply that by 2,500, you come up to $11,250. Which is still nearly $3,000 more than what you had on Thursday if you had a 10,000 share lot on Thursday right before the close. Up $3,000 on an $8,500 valuation. That is still an amazing return. I'm not a phony cheerleader. There's reasons to be happy with your holdings. As you know, if you watched the Zoom call on Friday, and I made a video about this if you haven't seen it, but if you know, then that they bought Tickery. It was pointed out that ticketing is a $100 billion industry, and if Tickery, that we just bought for $20 million, the company just bought, Humbl, for $20 million, if they get just 1% of that industry worldwide, it's just 1%, you're going to have $1 billion in revenue. Now, revenue is not profit, but I think there would be a lot of profit in that. And that's another reason to, I meant to mention that yesterday. So the bottom line here, before I move on to something else, is that there's reason to be encouraged. Let me bring something else up. And the idea is, I had talked about oil and gas. I talked about DIG, which is a two-time oil and gas purchase. Let me bring the stock action up here. And you can see this is a 5-year chart, and it closed today at 118. Now, here's what is interesting. I wanted to point this out. In August of 2018, this was $414. $414, and today it is 100, we'll call it 119. 14 months ago, 15 months ago, right before COVID, it was, this DIG was at, DIG as a symbol, was at $256. I told my friend to buy it at 63 back in November. Okay, so this is a 6-month chart on DIG, oil and gas, that I had talked about in a previous episode. The question is, as we have sometimes for some of you with Humbl, what is the, when do you sell? When do you sell? So I'm going to show you something about how to handle that question, which I've often said is the hardest question to answer. When you have a profit, when do you sell? And how do you handle that? So I'm going to use it with DIG. I'm going to give a lesson in selling with DIG. I told my friend that because we would be having a turnaround in the economy in 2021 worldwide, that meant we had to be buying, as a world, more oil and gas. And DIG was a 2 times leveraged ETF on oil and gas. So when I mentioned it to her, she got it back in November, and it was right in this area, right around November 16 or so, and she picked it up for $63. Now, she bought 600 shares, and at that time, that meant she spent, she invested about $41,000, and my target for that was that it would go at least to 120. And here we are today at 118. The other day, as you can see, it hit my target and it actually exceeded it a bit. It was at basically $25. Now, I think that DIG can go even higher. So what do? Do you sell here? She has a gain almost of 100%, very close to it. Do you just sell 600 shares? No. What I suggested to her is that she could do one of a couple of things. One, she could take 100 shares. And remember, when it's at about 120, even 10 shares is $1,200. So she could take 100 of the 600 shares and say, I'm going to sell that off in bits and pieces. I can sell 10 shares here. I can sell 10 shares there as it goes up over time. And that way, she's only targeting 100 shares off at first to sell off in pieces. And that she can raise money, take money in, and if she gets done selling that over the course of whatever, 6 months or so, I mean, she can see how that price goes. But I've also talked to you before about the importance of raising cash. You don't want to have your stock go, right up. I should use my left hand. You don't want it to go up and then come down, kind of as we saw in a microcosm in Humbl over the last couple of days, and not get any cash. But you really don't want to do it. It's going to happen when you get a stock that went up 42% on Friday and 23% on Monday. That's a burst. That's just a burst forward. You're going to get some profit taking. I still think there's reason for it to go up a lot. But let me go back to DIG for a moment. If you get a stock that goes just like shooting up, right, and then comes down, you want to be able to have a plan ahead of time how you're going to take profits. And so in her case, you could say, I'm going to sell 100 shares, but not just bang one price. You could sell them off in lots of 10, 15, 20, whatever. Again, when you're dealing with the stock that's in the neighborhood of 120, even, let's just say 120, make math simple, 10 shares is $1,200. So you can both have your shares that you're going to hold as maybe a core holding, at least for the rest of the year. But with 600 shares, if you wanted to start selling some of that off in bits and pieces, you could do that. Obviously, I'm not as favorable to it as I was when it was $63. But at 120, and with the world economy starting to open, I think it still has some room to move. From 120, it could go to, I don't know, 170. So there's 50 points, and you can use your own decision. It's obviously a much more expensive stock than what a lot of people who are holding Humbl are accustomed to paying for. Anyway, with that, I'll stop, and have a good night, folks. Take care.